Good morning and welcome back to the Opportunistic Trader for Wednesday, August 22nd. It's an interesting day today, or actually it was an interesting overnight last night from the news of the day, but I want to start by going over yesterday's action and trades that were done yesterday at the Opportunistic Trader and how we did and what our thoughts were and sort of go over that. And as usual, I'm joined by Vince this morning.
Good morning, Larry.
Good morning. So the trades that we had on coming into the day were, for us, we were short Apple and short S&P. Vince was long gold, as we discussed yesterday, and I actually sold gold. But what was interesting, I actually made about $7 on my gold trade. We covered nearer the lows yesterday at 1194, and Vince remained long, and gold is up, traded up over his target of 1207.
Right.
And I don't know if he got out, but we'll talk to him about that. So yesterday for me, we made a little bit in gold. Unfortunately, we got stopped out of S&Ps, which was really aggravating because, we were short around the highs. We made, I didn't think we were going to make a new high. And once we made a new high, it kind of stopped us out. And, that was not a good one. We've been in the Apple trade for 3 days. We're now slightly positive on it. But we're going to sit in it for a little bit more. I think there could be a down trade here. So that's really what was going on as far as positions inside of our entity. Around the world yesterday, the markets were very interesting in S&P. Market made a new high of the move, an all-time high intraday, and then faded towards the close. We noted there was significant stock for sale last night on the bell, upwards of about $1.8 billion, and it always maneuvers around, and sometimes it works as far as being able to gauge the close, or if the market should come in. The cash markets did come in. The stocks paired off. Not fully, but mostly, and then the market closed a little bit weak, and then right on the close, they had the double duo of Manafort and Cohn, both basically one convicted and the other copping a guilty plea. So the market got very nervous after the close. It actually traded down about 15 handles. In the reopening at 6 o'clock, and then, as always, it proceeded to ignore the news and trade back up. Touching on markets across the globe, China was a little bit weak, down about 70 basis points, which isn't really a big move there, but trending down towards the low. Our market, just back briefly to our market today, they're saying in the news and on TV that today would make this the longest bull market in the history of the market. So that's an interesting thought. And then going over to Europe, those markets are slightly positive, maybe about 25 to 30 basis points. You're not getting much action there, but they didn't go down basis the negative news out of the U.S. Regarding Trump. And looking at the dollar is a bit weaker again today against the euro, and across the board. Gold is up about $5 at 1205. Oil is the outlier. Oil is up about 2%, a little over 2%. It's up $1.23. I like that trade because the spread was kind of giving it away. Spread basically went off the board yesterday. It traded out to about $1.60. Obviously not that liquid because it was going off the board. But
hey, Larry,
yes.
Just 1 second. To your point yesterday, spot cash is up $1. So you're right. The new front month is overperforming this morning. So sorry to interrupt, but there you go.
Yeah. So basically, obviously they had inventory numbers, which always amaze me that the market gets so volatile for a weekly number, but the market got more of a draw than they thought. Market traded higher. It was only up about 40 cents, I think, because of S&P weakness. And then once the S&P firmed, that market took direction from its own, trading. It's interesting out there. Today is an expiration day, and we could look at the straddle markets, and they're pricing in about a $10 move in futures, which is a little bit better than we've seen, but overall, it's pretty low. Interestingly enough, we had, I thought, two very, very good experts on yesterday in their webinars. One is Adam, who talks about the commitment of trader data, and he parsed out a lot of information, and he was saying that he sees a huge short in the VIX, and it was a crowded trade. And ironically, when the S&P was making a new high on the move, the VIX stayed bid, and there was about $1 in that trade on the VIX, which is pretty big. It's like an 8 or 10% move, so you could have captured that. And then Tom was talking about volatility skew, and positioning around options there. So those were two good informational pieces, and for me, that's all I see. I'm going to throw it to you for commentary on Trump and markets and all that you see. So you're up, Vince.
Oh, me? Okay, fine. Just to start where you finished, one of the things, if you're an options trader, especially if you're not just a directional trader in options, but a volatility person, if you're in a market like the S&P or stock market, which is usually almost always a put skew market, when the market makes new highs, volatility, implied at the money volatility, should decrease. But when the market makes new highs and volatility doesn't decrease, you might have an ARB, as Larry just described, was taken care of. You also might be looking at a situation where, ironically, volatility going up when the market's going up, when it's not supposed to, allegedly, implies that we're going to move big. Nothing's 100%. We're talking about handicapping. It implies that because we could move higher because people are actually buying more options because they're committed more to their position. You may see more hedging come on. The other reason that volatility could be up on a high is because people are running out of money to speculate on a bull market in stocks, and what they're actually doing is buying calls instead of committing more money to stocks. So in these situations, in the few times that I do trade the S&P, although I should trade it more, I would look, there may be an ARB like you described, but I would also look to buy hedged. I've done this before. When the market makes new highs and volatility goes up, it means someone's buying options because they're bullish and don't have enough money, or someone's buying options because they're not getting out of their stock. Either way, it will repel the area. I buy a 30 delta call and hedge it. If I want to reduce my risk a little bit, I buy a 30 delta, 10 delta call spread and hedge it. Why? Because if we drop, you move away from your longs and vol should blow out. Even if it doesn't, you moved away from your longs. If we rally, you're going to make money because volatility will, it might not, but volatility should come in, but you are hedged and you're going from your long to your short and gamut. So that's one way to play when you see that sort of divergence in volatility. Quickly, just touching on Trump. Yesterday is significant, not necessarily today, but it's significant because there were two court rulings, right? The first, we'll get out of the way, although it's, not small. The Manafort case, which, there's so many M's out there, Manafort and Mueller and Michael Cohen. I don't even pay attention anymore, but Manafort was convicted on tax and bank fraud charges. That doesn't directly affect Special Counsel Robert Mueller's investigation if he wants to pursue the president. but it does give him more impetus or a boost. The thing I think that created uncertainty, and uncertainty is the word we're looking for here. It's not about pro-Trump or anti-Trump. You create uncertainty when you have a former lawyer for the president, we're talking about Michael Cohen, said he violated campaign finance laws ahead of the 2016 election, and then he did it at the direction of a candidate. So, he wasn't working for Bernie Sanders. He wasn't working for Hillary Clinton. He was working for Trump. So, he indirectly implicated, or maybe directly implicated, the president during the campaign of directing him to meddle in campaign finance. Bottom line is, where it goes from here, we don't know. But when you have uncertainty in the market, it may not be bearish, it may not be bullish, but what it does do is it makes people who would be putting money in the market otherwise keep it on the sidelines. So you might create a dip to buy. It might be a big nothing burger, but it's uncertainty. And, we have enough uncertainty. At some point, we're going to break down on that. Anything you want to add to that before I touch on your gold trade yesterday, Larry?
Well, it's funny the way I look at the equity markets in general. I was talking to Tom, one of our experts in equity and equity options, and we were talking after he came on for his webinar, and I said, what's interesting about the market and what's made it really so resilient is we've never had, or maybe we had in February because of the volatility products that blew up, and maybe in 15 in August, but we've never really had two back-to-back down days of over a couple of percent. So,
right.
Until we see that, nobody is going to sell, no matter what. Doesn't matter what
right.
happens. Doesn't matter if they go in the White House and arrest him. It doesn't.
Right.
Nothing matters to the market. So, people have been resolved to the fact that they never have to sell their portfolio, and
right.
they can either buy the dip or just sit. And until it becomes actionable at lower levels, which, listen, I've seen it in my career since 1984, probably 6 or 7 times, where people have been literally liquidated out, of large portfolios and whatnot. But until you see that, nobody is going to react to this news. They're going to say, hey, it doesn't matter. They're not going to do anything to him. So it creates a buying opportunity, again, like last night, when the futures traded down about 10 handles from where we are now. So, my thoughts are, I'm not bullish, but I'm not going to react to a news headline that the market's going to shrug off and get bearish. So,
right.
we'll trade levels and areas that we look at. But again, I don't know what this means. Obviously it's not good.
Right.
The interesting point that I would like to point out to the people that are watching this is volatility futures in August are trading about 12.95 bid, and traded up to, when we made the lows last night, 13.5. What's interesting is when the SPU was here in February of this year, volatility was 9. So we're at a significantly higher volatility as we are making new highs. And if this move was going to be true to really last, I would think you would see a lower volatility. And I think we're close to having some type of correction into the fall. Again, I don't know exactly, the levels per se, but, I think this is the high in here. I don't think it's really news related, but I just think, they pushed the market pretty strongly in the last 3 weeks when no one was here.
Right.
We're up like 8 out of 9 weeks, and
right.
The market's looking frothy. But as far as
the Fed can, and the Fed can stomach a 2, like after all this tightening and the market rallying, we can have a 2% correction. What's the big deal? As opposed to having a 2% correction from 50 handles lower. It's a totally different situation.
I'm not. For me, 2% is not a really big correction, but it's funny that you bring that up. If the market went down 3 or 4% right here, people would get annihilated. It would be an annihilation. So
you think okay? That's cool.
And what's funny is, I was discussing this with someone else last night. The market can't handle it. It just can't. The returns are they're not great out there. Like Blackstone multi-strat fund of funds
Right.
is down on the year or flat on the year. It's a massive fund of funds.
Well, if you're an active manager, what are you doing? The market is getting narrower and narrower. You roll into Apple, what's left? Roll back out of Apple into Facebook, like you said.
Well,
Like
listen, the only
they're
stocks,
all crowded into everything.
yeah, the only stocks they talk about are FANG. They're not
Right,
talking
exactly.
about Walt Disney or any bank stocks. It's just FANG because that's what's moving.
Right.
It's interesting to me, and we had a Bitcoin webinar yesterday that was very, very informative, and
And I want to touch on that when we're done, because there's a nice little trade in there coming up too.
and
Go ahead, I'm sorry.
and with that, the only reason why Bitcoin even exists or is trading in my mind is because somebody wants to trade it because it moves 5%. I saw it was up 3% this morning. Then it's down 4%. They traded it, because they need movement. People need movement. They can't, Apple had a great move, but the move was tradable for about the last $7, but overall it wasn't moving enough. They need a Netflix moving $23, and that's why they go to those markets. So Bitcoin is an interesting animal.
Right.
I don't know.
Which brings us to what I want to talk about. Trading is trading, especially if you're an active trader. What you trade doesn't matter, although you may feel comfortable trading oil because you grew up on it, or precious metals or something. It's important to trade what moves and what you can apply your systems to or intuition to in other ways. Example being yesterday. I could trade intuitively, but I'm much more comfortable with a quantitative system that, I have some clients, and those clients are not going to trade on intuition. Well, they're going to be intuitive. They want quantitative stuff from me. So I've had a series over the last 2 weeks of 1 to 3 hour buy signals in gold. So I've probably taken $6 out of the market over the last 2 weeks in gold. And I've had my money, if you want to look at it that way, my money tied up, or my brain tied up focusing on that. Meanwhile, I get a signal, and what we're leading into is here basically what you did. I get a signal that's one of those hourly signals. So I'm like, okay, I should buy it, but I don't. But then it rolls into a 4-hour signal. So you got a little bit of a snowball. Then I buy it. Now we're talking about, I should have bought it at 11.89. I bought it at 11.96. And now it's starting to show me reversal levels that can get it up to 12.20. So 12.05 was my first target as a soft target, as you mentioned. But here's the thing. Between 1,200 and 12.02, we're talking basis D's, my system said short-term overbought. But, short-term meaning for the next 2 to 6 hours. My other, my longer-term system said it's a dip to buy. Now, I don't buy dips. I buy momentum unless I'm averaging in, and I don't do that. So at the point that my system said you would not be adding here, if you were short-term, you'd be getting out. Without looking at what I do, Larry sees a level of overboughtness, I'm guessing, a little bit of expansion of too far, too fast, even if it is a bull market, which I'm not saying it is, and sells it. And I had a level of 11.93, 11.95 area congestion to buy, or if it gets through there, it gets worse. And, of course, he covers 11.94.5. So in 6 hours, and, I'm not really that interested in complimenting Larry. He gets enough of him. He takes $6, $7 out of it, whereas, it's taken me 2 weeks to do that. So the point is, other than the fact that, he has his money free quicker to do other trades, is that you can swing trade. And that means, maybe we are in a bull run, a short covering run, but, it gets ahead of itself. You want to regress to the mean a little bit. You want to short it and cover it and back and forth. So, you're looking at two different styles, and I think that are actually complementary in this situation. If we were to go back down, throwing my numbers at you in gold very quickly, because this is not the gold show. This is about the trade that you did. If we were to go back down to that level again, that you sold, 1200.40, a little bit below that. If we go below that, I'm not so sure I would cover at 94 this time down. And the reason I say that is because on my system, all right, we're in a volatility expansion this week, which means if the trend doesn't continue, that 1167 area might not hold so nicely on the next time down. So that said, just giving you some quick levels in gold, 1205 was my soft target. It's really 1205 to 1207 as a congestion area. And, we finally hit it and it rejected it again. So let's say I'm playing the overbought time thing. It might be a good level I'm not doing it because I'm playing a longer term trade. It might be a good short down to 1200. And if it breaks 1200, it might be a good short again down to 1195. Maybe stop out with a new high. I think anytime you sell gold when it comes off of a high in this type of environment, you got a good chance of taking $4 or $5 out. It just doesn't complement with my system.
Vince, let me just ask you a question. You're long gold. You're long gold. It just made a new high at 1208.
Right.
Where are you getting out?
Okay. All right. Here's the system. The 4-hour target, the 4-hour chart target that I had, 4-hour vector volatility system, said you buy it at 1196 and you risk 1189 for a loss, and your target is 1205. Now that's not the usual risk reward. Usually it's a little bit better risk reward for me. But as we broke 1200, even though it was a sale on the hourly based on your perception, the daily is now showing these signs that we could run. So the problem, not the problem, but what the system does subjectively is it says if your target's 1205, you could, if you were a robot, right, this is what algos do, you would leave your stop where it is. If you're a human, you could take half profits and you can trail stops. What I'm doing today, specifically speaking, is I'm taking my stop at 1189 and I'm raising it up to the entry level, which was 1196.10, and the client is long at 1195. So we're going to raise the stop level to the entry level. Now, I'm going to let it run until Friday, or if I see something, let's say it goes to 1210, all right, well, actually my levels above next are 1211, 1212, and then if it gets into the teens, I'm not selling it because the teens are a skate area historically for gold. To answer your question directly, my choices this morning are take half profit and trail a stop up at say 1198, or let it, this is my choice, is how I'm going to trade it, or let it run and raise the stop to my entry level. That's what, so what I'm doing is I'm letting it run and trailing my stop up to the unchanged or the entry level point. Does that answer your question?
Yeah.
Okay.
It's I would say for me, I'm impressed because that shows great patience. Like for me, I don't have that patience.
No, but to your credit, you do have that patience. The only reason I'm staying in is because, frankly, with my little portfolio, I've been trading 1, 2, 3 hour trades, but this thing is starting to snowball. I'm actually very impatient. I wanted to put my stop at the level that I talked to you off the air and said I think 1194 is a scary area. If I put my stop at 1194 yesterday, you would have locked in profits and I would have locked in losses. And luckily, I didn't. So I'm fighting to not be impatient. The flip side, I think, of impatience, to your credit, is timing. If you time something perfectly, you took $7 out of a $10 range, right? What have I taken out? $11 out of a $40 range. It's
not just different. It's just different. Like for me, if I was doing that trade and we're up at 12.
Yeah, what would you do today if you were long from 1196?
If I was long, and I would definitely, for me, this is just me trading. I would take,
peel back. Yeah.
I would take at least half right here.
Right.
You have a good trade, and then I would take my stop potentially and move it up to 1200, so that at least I'm a winner on the trade. And then, for me, I know that there's a lot more trades, and to your credit and to a lot of trend followers' credits, they're able to capture, very large moves and stuff that moves. But what I see, and Mike, who is with me here, we follow CTAs and all of that. They do really well in a massive trend. But what ends up happening is, like in gold, they're not in this trade short until
There's no trend. There's no trend in gold.
Well, they're not in it for the first 100 points down or 80 points down. Then they pile in. Then it makes a new low and they pile in. And then if the thing gets back to 12.12, 12.15, they're net down on the whole trade, and they're freaked out and they're covering.
Well, I'm not disagreeing with you. I am definitely being a little bit of a pig here. The proper thing to do right now, right? Okay, and this is the proper thing to do right now. 1205 was my soft target. I should be taking, normally I'd be taking profits in half and then trailing my stop higher, either based on a system generated stop or entry. I'm not taking profits. Doesn't mean I won't take profits and take half. I'm considering putting a stop at 1205 on the way down through. Because I think 1205, 1207 is a congestion area, and it's maybe resistance going up, and now it's support. But if it gets through it on the way back down, we could wash out the 1200. What I'm actually considering doing is I'm weighing what I want to do versus what I think. Look, I've got a fund that I advise on their sub strategies, and I'm permitted to talk about this if I don't talk about their name. They manage risk differently than me. They manage risk differently than you. We look at VAR, like you'll put on a trade if you see asymmetric opportunity, like, gold to sell here. I think it's overbought. Okay, what do you risk? I'm going to risk 2, or something like that. And these guys, some of these macro funds, and this is exactly to your point of like not making money, they look at things from a notional. We're going to put $10 million notional into the trade. And I'm like, what? You're willing to risk $10 million notional? Well, yeah. I'm like, but why would you not just say we'll put $100 million in and risk 1% or 2% on that money? So they look at it differently, and it's kind of freaking me out because I want to say I'm out on a drop of 1%, and meanwhile these guys are going to stay long. So I'm kind of conflicted. I'm going to basically advise. I've advised to raise the stop to 1196, which is what I'm doing as well. And I'm probably going to put a stop in 1205 on half on the way down, a little bit below 1205. But I do believe, and this is possibly being a pig, contrasting it with what, hope I'm saying his name right, Michelle did in Bitcoin this morning, that I think that if the market really rejected the 1160, 1180 area. This is some sort of a macro thing that I have. And if it stays rejected, we could have a short covering rally up to 1229. Okay, that's my ultimate level. So if I take half profit now, to your point, not only is it money in my pocket, it's psychologically rewarding. I won't be a loser on the trade. I won't feel like, oh crap, that one got away from me. So I'm listening to myself, listening to you, and I'm probably going to put a trailing stop on half the position, and then the other half I'll let the market take me out between now and Friday, because there's probably swing trades in there, but I don't want to focus too much on gold with other stuff out there. Well, which brings me to what Michelle did. I'm sorry.
Gold looks really good. I mean,
it does, trade, and isn't that the moment where you want to sell it?
I mean, it is gold. I was just going to say, I would put shorts out at above 1210 area. It's probably probably a trading short in here, but you have a little bit of a change in heart in the dollar. The dollar's been a bit weaker. The euro's back above 116, so it's giving, I think, a little bit of a bid to the metals complex.
And when you have Greg on, I think he can talk about that, because what I'm noticing is that the metals are decoupling from their yuan following, based on the Chinese comments. Whether they're honest or not, who knows, but it's more following the dollar. So gold is now again a proxy for the dollar. So you can put any headline you want out there. gold is higher as Trump might get impeached. We don't care about that. And you said this before. The headlines don't matter. It's how the markets react to the headlines that matter. We trade the markets. We don't trade the headlines. And you know, I do have 1210 as an area. So if when we get off this phone call, I'm going to put in an order OCO on half the position. I have 1210 to 1212 as the next congestion. To sell half the position at 1210, OCO stop at 1205, and then let the rest of it run. That's what I'm going to do. And I'm going to recommend that to the client as well. I really think everyone should pay attention to Bitcoin, because in contrast to me letting my profits run, I'm also putting all my eggs in one basket. And if I fail in this trade, it looks really bad. If you look at Bitcoin, you know, Michelle did a trade and he took half his profit at a smart level. On my system, which actually I'm looking to apply to Bitcoin and start trading it now, is this is a pullback to buy. It's like a bear market rally, I guess, but it's a pullback to buy on a very short-term basis. So, you know, he's right to take half the profits, you know, and then decide from there. That's what I should be doing right now. And, you know, I should be putting in my levels when we get off the phone. But, you know, it's to your point. I think active traders really need to focus on what the takeaway from this is. If you have a winning trade and you do what I'm doing right now and you don't make money, it's psychologically damaging, and you have to be able to recover from that. I'm risking a lot mentally because my next trade might be what we call the psychology of regret. Oh, damn it, I missed that trade. Well, now I'm going to double up on the next dip, or I'm going to short it hard. Taking profits, you know, what's the phrase? No one went broke taking profits.
That's true.
Using trailing stops on half your position is really smart to do. The rule of thumb in options, it's a rule of thumb of anything, but I learned the trading options was, hey, Vince, you're long 50,000 Vega in a market that's not moving. How do you feel? I don't know. And my boss would say to me, well, take half of it off and tell me how you feel. And I take half of it off and he'd say, how do you feel? I go, I feel better. Well, then you didn't feel good the last time and you didn't know it, idiot. Good job. That's why you took it off. And he was right. And now having a conversation with you, I'm starting to feel, you know, nervous. So I'm going to put in an order to sell 1210s, OCO 1205 on a stop on half the position. And
yeah, but you're not, you know, listen, for me in your position, I would never be nervous. You're up money. You're in a position where you can never lose on this trade. So
right. But you're also, but I hear you. But and the psychology of people is different. You know, I think people who do this for a living, I will let this run because I know I'm letting this run because I got a major non-system reversal signal at the bottom, and I got information. You know, that washout that you called the bottom on, that was a broker filling an order for someone and finishing it and beating the VWAP. That's exactly what it was. And does that mean we can't go lower? No, but it does mean.
I don't think that order beat any VWAP.
No, I'm saying it was no. What I mean is that was the last 1,000 of a guy who'd been selling for 2 months.
Yeah,
that type of thing.
It could have been. Say in my assessment, and I'm not a gold guru, but I can assess markets that was it was an algo kicking in on that order being sold. Short. That was somebody that was being liquidated at the long. So
no, but that's what I mean. We're not disagreeing. There have been sellers starting with Venezuela for the last 4 months, and it just hasn't been transparent. And whoever handled someone who's been selling for the last 4 months, whether it be a miner or country or a big fund, that broker or executor, if they had, say, a 10,000 lot order or a 20,000 lot order, whatever, the last 1,000 are sold hard to go back to the customer and say, look, the last print is much lower than your average sale. And it was someone liquidating along. They probably got some shorts to get in there as well. But that was beating a broker beating the VWAP on his last, you know, piece. So that makes me more friendly to the market. That said, I don't see us being overbought, believe it or not, because we're so orderly. I'm actually getting a buy signal. I'm not buying it again, but I'm actually getting an hourly buy signal to be long at, this is crazy. I won't do it. All right. At 1204, you should be long. Above 1204, looking for 1216. Now, I'm not going to do that because I'm already long, but a day trader may do that.
Let's shift away from gold. We're definitely giving gold a little bit too much run for itself.
Sorry, but it was about the trade that matters.
No, absolutely. And I think it's important educationally to explain to our members and people that are seeing this, exactly how to handle trades when you have a nice profit and, protecting against a loss. Simple.
You've heard my point of view. I really think people should get on the crypto chat and ask Michelle, what's your rationale behind taking? You want to learn something? Ask a guy who is doing the opposite of me right now. What was your rationale for taking half the profit? Is it psychological? Is it monetary? These are important things. By the way, changing the subject totally, not something that, I'm trading, but below 1215, Apple's a short to 1208 with a stop out of new highs. I'm just saying that. And, I'm not afraid to disagree with you, but I have a regression to the mean play on that right now.
That's good. We're actually shorted. We've been shorted for 3 days. It has not worked really until this morning. It's been a little bit painful, but not a lot.
Well, the signal I have is for 6 or 7 days. So it's not the type of thing I trade. So this is a patient trade. You talk about patience. When you have a conviction trade, this is a patient trade.
So you want to come in and try to tame the beast. This beast is
no, absolutely not. Well, I mean, look, did I not harass you off the air and say, Larry, if we don't get below 1194, it could just be a boring range day, right? Yeah. And guess what? You just took a great trade off the table, and that was probably your own level, and it coincidentally just happened to be in my support level.
A little bit of luck and a little bit of nudging from my partner over here who pointed out the level to me. So we got.
Well, isn't that what you just did to me by saying I would take half?
But that's what's nice. It's funny that you talk about that. That's what's nice about, in a way, having more than one mind or one person, and what makes the opportunistic trader a great proposition is that you're getting ideas from a community of people that do this every day for a living for years and years and years. And I know
it's like being on a trading desk. If you're trading alone and you're an active day trader and you're taking your stuff from info from Twitter, there's a lot of noise. I mean, I'm not saying to not you listen to Twitter, but stock twits or whatever, it's there's maybe some good information there, but there's a lot of noise on this. It's going to Larry's going to say to me, or someone's going to say to me, or Tracy will say to me in oil, I would take half profits, but that's me. You'll say, if this were my trade, I would take half profits. And I'm saying, crap, now that he said that, my stomach hurts a little bit, right? So I got to take half off. So I'm going to be a pig and not sell now, but I'm going to make sure that I don't lose my profits on half. So that conversation, if we didn't have it, we'd go back to unchanged and I would scratch, and I'd be miserable.
Yeah, but my advice to you is I wouldn't be in that position. Even if you're making $2, you don't want to scratch the trade you're up $10 in.
Correct. That's the psychology part. And I think people should ask Michelle that, or Mikhail, I'm not sure how to pronounce the name, on Bitcoin. What was his rationale of getting out of half and not all? I think there's a lot of rationale in that. So let's say you bought something at $20 and it's trading at 21. Okay, right.
If you get out of half, okay, now you're in the half the position. You've made $1 that takes your price average down to 19.
Right.
On basically
the remaining.
on the remaining, and you're basically a wash. So that's
right.
a lot of the rationale of
especially if you're a swing trader, you can trade around it. But back to your point, if you're a guy who's trading from home, or a girl trading from home, and you feel like you're isolated and you're looking for information, you're going to get opinions, and opinions really don't matter. Everyone has one. But when you get someone who disagrees with you, without putting in all caps and cursing at you, you've got a trading desk. This is a virtual trading desk, where people say, hey, it's almost like Larry said to me yesterday, you're long, I'm getting short. You want to buy more? And I'm like, no. Well, I'm really going to get short then. So, it's kind of like healthy competition. You let people know what your point of view is, instead of living in a closet with a computer trading off of some headline that makes no sense. So I value this as a quote expert. I look at it more as a team member. I value this because when I get an oil signal to buy or sell, I'm going to float it out to you and Tracy. When I see something on the dollar yen on my system, which is volatility based, I'm going to say, hey, I got a buy signal to Greg. If I want to buy natural gas, and say, hey, I got a buy signal on nat gas, and my level to get out is here. Bryn, what do you think? And she'll give me a totally different perspective that either corroborates or contradicts what I'm saying and makes me think. That's important.
For sure. I mean, it's definitely been good, especially for myself in my trading, is just being able to bounce ideas and thoughts and different trades off of people, our own experts. So, it's good.
Right.
So I just wanted to go over the economic calendar today. Really, there's nothing other than the Fed minutes at 2. We have Jackson Hole, Powell on Friday. So that, I guess, we're waiting on. Markets not really pricing in much there. We have oil inventories today at 10:30. The numbers yesterday were lighter than expected. Oil's trading up about $1.15. I think a lot of the expiration pressure from the contract rolling off is gone, so the market probably trades a little bit bid here, although skittish, in the $67 area, up about $1.15. Today at 10:45, Andy LeBeau will be coming on discussing the inventory numbers. And then at 10 o'clock, we have Phil Flynn from the Price Futures Group, who is very versed in all commodities. And I've known Phil for 30 years, and he's been providing me information, very good information, through that time.
And Phil was good friends with my directional mentor, Peter Butel, the late Peter Butel. And Phil knows his stuff, and I pay attention when he has something to say.
Yeah, and then at 11 o'clock, I'm going to come on, and I'm going to go through a very generic option overview, sort of stuff that I do on the, like on the easy side for people that are watching to learn how to do stuff that has made me a lot of money over the years. Very vanilla strategies that that I do, week in and week out. I used to do it option expiration week, which was the third Friday of every month, but then they added weeklies, and now they have, Wednesday and Monday. So these strategies can be done almost every day of the week, and I'm going to hopefully be joined by you as well. And then at 1 o'clock, Greg is going to come on, our FX expert, who I'm very impressed with, is an excellent trader, is a very, very good news guy, meaning he sees news quickly, he operates fast in the markets, and he's able to trade off of what I would call current events or news of the moment. Right. And
not to mention his anticipation yesterday of potential problems going out in Latin America. Like he's ahead of the curve, because let's face it, currencies will reflect things before equities do sometimes. And he made a comment yesterday that I was not paying attention to at all. But then after I looked into it, it made a lot of sense. He's saying, Brazil could be your next big problem because of the election and because of all this other stuff. But it's worth noting. Macro matters, kids.
All right, so that's our schedule. That's what's on tap, and I'll be back again prior to the opening just to go through any changes and positions that we put on. But we'll be in the chat all day. And again, I thank you.
And
have a good day.
Thank you, and thanks for listening.
All right.
Thank you.
Bye.
See you.